Okay, hey, hi, good evening. We're going to talk about my $350,000 portfolio. I'm really excited about it. It's been a long time coming um, because a lot of the stocks that I'm investing in, unfortunately, are somewhat down 5–10%. I'm fine with that. That's not a problem. But when you're trying to make content and you're trying to hit big milestones so people get attracted and want to view the videos and interact with your videos, it makes it a little bit difficult. So I'm happy with where I'm at. I'm happy the stocks are going down in a long-term perspective because I can continue to buy at cheaper prices. But you probably wouldn't know that the stocks that I'm investing in are down, considering we're only about 3 to 3.5% down off of market highs. And like I said, I think that there are a few stocks that are holding the market up, mostly tech stocks. But if you look at a lot of consumer stocks and a lot of the fundamental of the S&P 500 and hold a lot of the chunky value of it are down. I think that it's mostly being propped up by Microsoft and Apple and a lot of these other tech stocks. Google has been okay. I think Google's near their 52-week highs as well. So I think that because these companies have such large market caps, they're able to prop up the rest of the market. And while the rest of the companies, like your energy companies, your industrial companies, your consumer cyclical, your consumer staple companies, and also real estate's doing really well as well. So disclude that from this conversation. But a lot of these other companies, industrials, 3M, stuff like that, they're all down pretty big. Yeah, that's kind of the outlay of the portfolio. I'm really excited to be here. Really excited to share the $350,000 with you. I'm not going to show you every single position today. If you want to see the whole position, make sure this video gets 250 likes, and I'll show you every position I have in my portfolio. I think the last time I did a number check, it was between 40 and 50 stocks. Maybe it's actually above 50 stocks now because I'm starting to add in things like 3M. But anyway, that is what it is. Before I start jumping into the actual portfolio itself, go into my overview. I think you guys always like seeing how the portfolio is split up in percentages. And you see two pie charts here on the right. You see basically in the center screen the amount of income or dividends that are coming from each sector. And it's not always sectors. There's also cash, fundrise, ETFs in there as well. And then on the right-hand side, you're seeing the portfolio value by each sector as well. So you can still see energy, which is in the big yellow on the right half of both pie charts, is generally the largest part of my portfolio, followed by real estate, financials, and consumer staples are getting up there as well. But I've been expanding in industrials. I've been expanding into healthcare, mostly in AbbVie, 3M. And I've been trying to purchase more in industrials as well, looking at some railroads, but the one railroad that I want to buy, and I've had in the past, and I just stubbed my toe on a chair, is Union Pacific. But at the moment, it still seems like it's at pretty close to highs, and it doesn't necessarily seem like the best buy at this point. There are some other companies like Canadian Railways and things along those lines that I've been trying to look at. But anyway, and I was also looking at some material stocks as well. So if any of you guys have any suggestions, leave that down in the comment section down below. But really trying to get some of these large yields down. I think I screwed up somewhere in my cash, so I'll have to fix that here. But I don't think it'll have too much of a change on the portfolio, because I don't have much cash at the moment. You can see it is not even visible on the graph, so it's probably not skewing things too much. Portfolio monthly income is up to about $916 a month, or $11,000 for forward 12-month income. Really excited about that. That does not include things like special dividends or anything like that. So companies that end up paying special dividends next year, like BHP did in January of this year, that's not included. So fingers crossed that maybe some of these companies buy back more stock or give special dividends because they have a lot of cash on hand. But no guarantees of that stuff. Total portfolio yields at about 4.8%. Yield on cost about 5.3%. I found a mistake when I was transferring this over from my Excel into Apple numbers, that I believe I was getting closer to like 5.8% or something on my yield on cost. And I think it was because one of my shares, I think it was like Seadrill Partners, had a reverse split, and that was dragging the yield on cost up. But the dividend yield has always been correct. Dividend yield is somewhat high at the moment. I'd rather bring that down between 3 to 4%. But I think continuing to invest in companies like Altria Group, Philip Morris, while they're down, whether or not they end up being the right investments or not, has artificially, or not artificially, but has increased the dividend yield of the portfolio pretty drastically. I believe that the consumer staples portion of the portfolio was about half this size. It was about, I think, 4 to 5% when I started the year. But since I've made some recent purchases, I made like over 100 shares worth of purchases, so close to $5,000-$6,000, maybe a little bit more in Altria Group. Actually, it's probably closer to 120 shares over the course of the year in Altria Group, which is probably a cost basis of $5,000-$6,000. So doubling the consumer staples portion of this, as well as some other companies as well. So I think that's relatively it. I think that some of you guys know that my goal for next year, not it in terms of what I'm talking about, but the overview of the portfolio. I think you guys know, if you've been following the channel a good bit, that the income that I'm expecting to get in 2020 was supposed to be around $12,000 in terms of dividend income, so about $1,000 a month. It's obvious that in a few months I'm going to blow past that in terms of forward income, because I'm already looking at about $11,000. So if I just add, $25,000 within the next couple months into the portfolio at 4% dividend yield, that'll get me to $12,000. So I honestly think that $12,000 is too low. Been fortunate to be able to get close to 58% dividend growth year over year from 2018 to 2019. Actually, looking at that, I was able to get around $5,600, $5,664 last year in terms of dividend income. And this year I'm on track to make $9,000. I didn't think I would get to $9,000, but it's looking like I'll hit that $9,000 mark. And that ends up being a 59% increase. Will I beat last year, 62%? When I went from 2017 to 2018, getting 62%, I don't know, maybe. That 4%, it's going to be pretty hard, considering we're almost halfway through October, and that means we have 2 months left. And most of the dividend dates are coming up with for December, so might be a little rough, but we'll see. Next year, you can already see, just based off of having 4 quarters worth of dividends compared to, say, investing halfway through this year, not having all those dividends come in, all 4 quarters of dividends come in. I'm already up 22% year over year. So hoping that within the next couple months, I'm able to deploy some more capital, maybe get this into 30 or so percent before I even hit the year. My goal from here on out is to get 30% year over year. But if I'm able to get 50%, man, then that'll drastically change the exponent or the exponential curve that you're seeing here. So this goals here is 30% year over year. If I'm able to keep getting 50%, then it's going to look a little bit different. I might be able to shave off a year or two in terms of being able to get to my dividend goals a little bit earlier. But anyway, going back to the actual, another cool thing is $1,400 this year so far in YouTube income. Not so far, but forecasted out. I think I forecasted the next couple months to have $100. So hopefully in October, November, December, I can average over $100 and get me to close to $1,400. Maybe get close to $1,500. I'd really like to do that. So where was I? So that gets me close to, in total passive income for the year, $867 in monthly passive income, which is insane. And then averaging about $710 just from or no, I'm sorry, 750 in actual dividend income this year. So that's really crazy. To end this year averaging $750 a month. I mean, that's insanity. Never thought that would happen. That's, Mercedes payment or something like that. But of course, the way I look at it is that's another $750 that I'm investing every single month that's going to help me. And if that's at 4%, especially if I look at it like next year when it's almost $1,000, that $1,000 reinvesting every month is going to be an extra $40 in my pocket every month. And then if you start thinking about the dividend growth on that, say it's 5%, 5% off $12,000, that's going to be, I don't know, another $600. So that's $600. That's going to be another $50 a month or whatever. It just starts getting really, really helpful. The dividends are like another person adding to your account without you even knowing about it, and really crazy. I mean, not only are you reinvesting the dividends, which pay you dividends, but the dividend growth is there, whether it's 5%, 10%, what have you. It starts getting pretty crazy once you get to the $1,000 a month or $12,000 a year mark, and then the real fun part is when you get to like $2,000 a month, because it really, at that point, just $1,000 a month or $2,000 a month is pretty absurd. I mean, it's like literally, I'm been the past couple months investing $5,000 a month, but most of the time I'm investing between $2,500 and $3,500 into the dividend income part of the portfolio, and so that's like me double investing, right? So in like 2 to 3 years, hopefully if we get to $2,000 a month, that's like me basically doubling the amount I'm putting in every single month automatically. So it's like, yeah, I'm putting in $2,500, $3,500 a month, but then my portfolio on its own is doing the same, and then that's just going to be like completely absurd. It's going to blow this curve out the water. So, but anyway, getting back to the actual, those are my goals here. The actual portfolio itself, up to $350,000 in terms of the portfolio size, of which 230 of that is in the dividend part of the portfolio. The rest is about 100 or so thousand of it is in my 401k, which I generally don't talk about because I can't really track any dividends coming from that. I could estimate, but I don't. So this is basically a very conservative view. If I were to say my dividends coming from my portfolio, say it's the S&P 500 or what, that's 2%. 2%, this could be another $2,000 a year. So this could be another $100 to $200 in terms of monthly income that I'm getting. But I don't choose to do that because I can't measure it like I can for my individual investments. So I didn't share all of the positions that I have, so I've hidden a lot of tabs in each of these. But I'm going to either show you, depending on how many shares I have in each, I'm going to show you the amount of income I'm getting from each. And hopefully that gives you an idea of, maybe my top positions. And like I said, if this video gets, I'd say 200 or 250 likes, I don't remember, I'll show the entire portfolio. So starting with my individual brokerage account, pays me about $6,400 a month, which is just under $600, or sorry, $6,400 a year, just under $600 a month, which is pretty crazy. And most of that is coming from energy stocks. You can see I have BP and BP Midstream Partners. I like BP Midstream Partners more than Shell Midstream Partners, but both I think have great assets attached to them. So I figured it's an MLP, pays 9% dividend, what the hell. Worst case, I lose $7,000. We'll see. So BP, between these two, pays me, BP and BPMP pays me close to $1,200. And then Altria Group pays me about $450. So that's about a quarter of this amount that I'm getting here, the $6,400. Pretty good, right? Then the YouTube Moolah account, I have two other positions. I think it's ITOT and IJR, which is a small cap. But I'm generally trying to focus on just investing in IVV, which is an iShares S&P 500 ETF, where I can just get the YouTube moolah, goes into my checking account, and then I toss it over to this account, and I'm able to invest it in, say, the S&P 500. And each share that I'm able to buy, granted they are like $300 a piece, pays $7. So 2.4%, 2 to 2.5% in terms of income, gets me $43 every single year, which is nice. $51 in total for this part of the portfolio, which is kind of crazy. You think about it. Made close to $1,900 in YouTube income, and I've put all that into here, and from that I'm making $52 a year. So that's pretty cool. If I wanted to get more aggressive, I could, but I think it'd be pretty cool just to have a part of the portfolio that tracks the market, and consistently every month, depending on how my videos do, maybe add $100 every so often. So then you have the Roth IRA, which you can see the three biggest ones in here, which is my Main Street Capital, my BHP, my BBL shares here, and then also my WP Carry. Main Street Capital was the position I bought earlier this year when I think I added the money to my Roth IRA, and I think I sold out of one or two things, and I was just like, you know what, this thing pays monthly, it's a business development company, it does well, let me buy some shares in here. So I have been reinvesting the dividends, so you can see yield on cost has already gone from 7 to 7.5%, which is pretty cool. But you can see for WP Carry, man, this is crazy. I mean, been reinvesting the dividends. I went from 65 shares to 75 shares, and keep in mind this is a Roth IRA, so this is tax-free. 4.5% current yield, 6.7 yield on cost, which is pretty cool. 72% gain, and then also my BHP. This is, I think, my best investment that I have in the portfolio. 147% gain. Started with $2,300 and paid $21.91 on these shares, and went from 107 to 140 shares. Pretty crazy. Yield on cost is 14.2%. Pretty wild. Pretty wild. So yeah, I think that's probably the best one I had. I was really loving this. I think it was close to 200% returns when this was up in the 50s earlier this year, 51-ish percent, or sorry, $52 almost, and $52. Yeah, it was definitely over 200%. But anyway, different story, different day. Really excited. Then you have your M1 Finance account, which is relatively new. I have two other shares in here, J&J and Visa. I'm not going to really hide that from you guys. But 3M is my biggest position in here. I also have 3M in my individual brokerage account. But in this account, it pays me close to $100 a year. Total part of M1 is paying me $182 a year, which is pretty cool considering I've really only opened it. So $15 a month just from opening it up. And currently, don't want to get too much into it because there could be another video, but I have $250 a month going in on the first of every month, and that's going into Visa at the moment. So I think Visa is a really good long-term play. Has a really good price to free cash, or not a very good price to free cash flow, but its free cash flow payout ratio is really good comparatively to where its dividend is. So I'm hoping as the market kind of corrects itself over the next couple months, fingers crossed, that I can buy Visa at cheaper prices, and I doubt they'll cut the dividend. Their price to free, or their free cash flow, not price to free cash flow, their free cash flow is very good at the moment. So there you go with that one. And then computer shares, scroll down slightly here. That's paying me close to $600 every single year. Mostly propped up by my ExxonMobil and my Philip Morris shares. I continue to buy more and more Philip Morris as the prices kind of decreased. You can see my cost base is around $76. I think if it decreases too much more, I would probably purchase shares. I think it's a really big competition, in my opinion, as to purchasing either Shell shares or Exxon shares at the moment. Shell pays a higher dividend, but Shell is, their free cash flow is like absolutely absurd right now. But I also really like what Exxon is doing with their Guyana and their divestment program as well. I know they're paying down some of their investments that they made in the Permian, but I think that long term they will be really, really helpful in shareholder distributions in the future. So maybe optimistic, but really good position here. Maybe I'll get this to 100 shares and maybe call it even. Currently at 85. So anyway, thinking out loud. Then Philip Morris, when this dropped from like $100 to 70 some, or like 80 something, I want to say earlier this year, I was like, man, I gotta buy. And then obviously you guys know it's been, hovering around the, into the 60s at some point and what have you. So I didn't pay 85 for all of them. I think I was paying 90 for some, and this was, this is in computer shares accounts. I've had some of these shares since 2014 time frame, but when it push came to shove and the price dropped to like 80, low 80s, high 70s, I purchased a decent bit. So that brought my cost basis down a pretty penny. So moving on, I think that one of these is my share value package, so give me a second here while I adjust. Okay, perfect. So the last couple accounts we have here: shareholder services, my share value package through work, fundrise, cardone capital, and personal savings account. Shareholder services, really small. My AbbVie position used to actually be in my computer shares account, but they switched direct share purchase providers, so it went from computer shares to shareholder services, which used to be owned by used to be owned by Wells Fargo, and now I forget who it is. I should probably find that out. But anyway, good for 21 bucks, which is about half of the $42 that I get per year. I think also within here is P&G and McCormick Company, which I wish I had bought more of, because I think that's over 100% too, but I only have like 1 or 2 shares. So disappointing in that one. Then I have my share value package. I won't tell you guys too much about that, but it's currently paying around $750 a year in dividends, which is really exciting. I'll probably have that blanked out by the time you actually view the video, so apologies on that one. But I guess you guys will have to just trust me on that. Fundrise, I've been adding $137 a month for the past couple months, so I used to only have around $1,200 in here, and then I think for 3 months now, been adding $137 a month. So recently been getting the dividend up from here, but I believe I'm only averaging about 4.5% on dividend yield from this, and I've chosen supplemental plus advanced, or advanced supplemental plus, or something like that. So we'll see if the dividend corresponds to this. It's maybe not perfect, but it's a very small amount of the portfolio at the moment, only $1,700, so less than 5%, way less. So probably almost less than 2% of the portfolio. So even if the dividend is off by say 10-20%, it's really not going to make too much of a difference. But my hope is that I get above 4.5%, and it starts investing in things that are more cash flow positive rather than capital appreciation. Because I think what I had is it on auto invest, which was automatically investing me in things that are ramping up, which would automatically decrease my dividend yield because it was waiting months upon months for things to go into operate before it actually started providing distribution. So different story for a different day on that one. But then you have Cardone Capital. This might actually be at risk of going down in terms of yield, but at the moment I'm holding strong at $900. It might go down to $675. So what I've actually been realizing is about $57 a month, and if you annualize that, it's about $675 a month, or $675 a year, not $900. And at the moment, I was expecting about a 6% yield on my investment to come in, but it's only 4.5%, which is fine. I'm not upset with that. I'm thinking that over the next couple of years, it will begin to creep up a little bit, but that remains to be seen as we continue to get the other 2 properties within within operations and starting to see decent distributions from that. So cautiously optimistic that it might get up to $900 a month, but at the moment only realizing about, or $900 a year, sorry, but currently only realizing about $675 a year. So over the long term, really expect this to double, maybe even triple over the next 5 to 10 years. Grant's really good about maximizing cash flow from properties and then selling them. So doing some minor upgrades and then flipping them for decent prices. So if we're able to get a 15% year-over-year return plus the 6% that I'm looking at, 5-6% in terms of cash flow, you're looking at close to 20% a year return, which would be awesome. But at the moment, I'm just kind of hanging out for the cash flow, and whatever cash flow or investments that I do get from this, whether it's 2x, 3x, that's fine. I'm just going to continue to keep investing it. So I'm hoping that when he does sell, he just says, hey, can I keep this money and use it to buy something else and continue to pay you the 4.5-6% on this money, which would hopefully be $30,000 or $45,000 at that point. And I'd be fine with that, because that would mean that the cash flow goes from $675 to $900, or 2.5 to 3 times that. So it might go to $1,300 to $1,800, or from no, I'm not good with math, $1,800 to $2,400 or what have you. So $2,700 rather a year. So we'll see what happens. Anyway, last account is personal savings. I recently drained this because I saw some buys in 3M and Johnson & Johnson, so I've been adding to those. And so this was getting around $5,000, and then recently have been draining this account to put into the individual brokerage account. I'm fine with it. Some people might be like, oh man, your cash reserves are really low. At the moment, I'm pretty steady. So I think what I might do is really focus and get these reserves up. I generally try to keep about 2 months of expenses, but because I generally don't have too many expenses now, that unfortunately living in Trinidad and have the company paying for a decent amount of stuff while I'm expat, the expenses are really low. I'm basically just paying for food and gasoline for the car that I get, so and cell phone bills and stuff like that. But other than that, it's relatively light. So I guess I've felt, how do I say this, urged to invest more, because I think that because my expenses are so low, I'm trying to get my savings rate up, or my investment rate up very highly, and generally try to aim for 35 to 40%. But this year it's been pretty high, maybe closer to 50-60% of my gross income. And you have to think that the government takes a good chunk as well. So really only trying to live on maybe 20 to 30% of the income. But we'll see how that actually turns out for this year. Been really hitting my investment targets, really blowing them out of water. Generally, like I said, try to invest $2,500 to $3,500 a month. Not talking about 401k. If you want to include that, then it's probably another $1,000, so $3,500 to $4,500 a month. And both months, I think I've deployed probably $10,000, so close to $20,000 since I've been down here. So you've really seen an explosion in terms of income, which is why I think I got past my goals this year. I honestly thought that my goal would be aspirational, getting to $9,000 a year, or I think it was like $8,500 for 2019, and here I am, and I'm almost at my 2020 goal in terms of forward income for next year, and we haven't even hit 2020 yet. So I might have to up it from say 30% to 45-50% year over year, and that would put me up there in terms of return or monthly dividend. But it is what it is. But anyway, really hope this video finds you great. Really hope this video finds you well. If you haven't already subscribed, please do that. Love talking to you guys. Love showing you guys my progress. really trying to expand my horizons, really trying to understand where I can take this thing, what other businesses I can really build off of this, and help you guys. My real goal is to help inspire you guys. Obviously, I don't have a very large portfolio compared to some. To some of you, it's a lot of money. To some of you, it might be, pretty decent for my age, from what you guys are saying. But to some of you guys, that are real big YouTubers, it's really not that much money, like compared to PPCEN or to some other guys. It's not a lot, but I'm really hoping that tracking my portfolio like this and showing you every little which way, every single angle, that it inspires you guys to maybe do the same. I was talking to a gentleman earlier about, he has a portfolio, probably dividend portfolio, about twice the size of mine. My portfolio is around 230 or so thousand. The dividend portfolio, his portfolio is probably, I think he said it was close to $500,000. And what he was saying was he really wanted to look at his portfolio like this, if it shows up, and see where he's overinvested, where he's underinvested, where his income is coming from, where his value is from. And he was really thankful for being able to have something like this to show him where his income and everything was coming from, because I think he said he was underweight in industrials or overweight in industrials, but had a really good conversation with him. He was really heartfelt and really glad I had that conversation. I was talking to him a little bit last night, texting with him back and forth, and talking to him a little bit this morning as well. So really happy that he got in touch with me, and really happy that he's enjoying using the spreadsheet, and it helped him understand where his income is coming from, so that way he can make better informed decisions. And that's really what I'm here for. Yeah, it might cost you $5 to do so, but I think that $5 is cheap compared to understanding where your portfolio is. And I don't look at it as $5 of me getting richer. I look at it as $5 you putting the money in and understanding, and putting rigor into your portfolio so you can make the right decisions. And it blew me away that within a week of me unveiling this, that I got a message like that. So anyway, rambled on. It's probably been like 40 minutes at this point. Appreciate you guys stopping by the channel, and I'll talk to you guys in the next video. Have a great night.